You are listening to chartingwealth.com for Thursday, the 11th of February, 2016. Where do we always start? With IYY. That is an ETF, an exchange-traded fund that tracks the total market. What do we see going on? Well, we see that we've got two strong two-day candles in a down move. The market actually crossed back over, never really crossed up on the 4th. It's sort of pinioned right on the MACD and the signal line. The MACD blue line hit the signal line and then bounced off and started moving down. The market had really just sort of slid sideways for several days and then moved down strong starting on the 8th. The 4th was sort of a hovering day where there was a lot of indecision. That's the 4th of February. And we had the candle close on the 10th, that third two-day candle since the down move started. So we've got 4 days of strong down moves in the market. Technically, the total market was up 0.01%, so 1/100th is not an up market. If we break it down and look what happened during the day on the 4-hour chart, we can see there was a little bit of up movement in the morning, down movement in the afternoon. We're still in a confirmed down move on the 4-hour chart, having started crossing over, going down on the 5th. Where are we? Well, we've bounced off the bottom at this point as far as the 4-hour chart goes, still below the 2-day trend line. Again, perhaps you took some profits when it bottomed out. Maybe you're staying in. Maybe you sold half of your profits in your virtual trade. Again, we're not a stock calling service. We are an education firm. We want you to practice, open a virtual account at any of the online brokerage firms, put $1 million in it, be a virtual millionaire, then start learning to trade. Once you learn to trade, you can make your own decisions at that point. Maybe you're writing this out, continuing to trust in your indicators to see just what's going on. Do be aware the derivative oscillator is losing its speed, and we do see a converging. We are closer than we were back around the 9th. So as the market ended on the 10th, we do have the MACD and the signal line getting closer together. Now let's range back out after looking at the total market. We're back on the 2-day chart. We're going to move to SPY. What is that? That's a Standard & Poor 500. What does it show? Well, that basket of 500 big companies shows that indeed the market, the index there was down 0.09%. Two strong down candles over the last 4 days. Those are 2-day candles that we're talking about. And if we go to the half day, we can see what happened during the day. Some up movement in the morning, down movement in the afternoon. Overall, market down, like I said, 0.0, so 0.09% down. Still below the 2-day trend line. We see a similar movement of the MACD and the signal line getting closer together, and the derivative oscillator reflected on our charts is a light red box behind our signal line and our MACD, the moving average convergence divergence line. So we're still sliding sideways. We've not had a correction yet on the 4-day chart. That is where we are. Confirmed down moves on the big chart and on the small chart since the crossover occurred, where hopefully you did your virtual trade and got in on the morning of the 5th, and you would have done rather nicely. Let's see. If you'd gotten in somewhere around the opening, or let's say you got in at the low, 187.99, so 188, and of course the market hit a bottom of 183, 182 at one point, so a high 182.70. Not bad moves at all in anybody's book. That's what we're doing when we trend follow. We let the big chart move in one direction. We watch the small chart after it corrects, moving in the opposite direction, and then moves back in the direction of the big chart. That is where we get in. That is where we get in and we make our money in hopefully the safest, most assured way possible. And again, the market is not perfect. No technique is perfect. But what you do is you manage your losses and you protect your gains. And that's what we're trying our best to do here. That's why we look to find good charts that work in the time frames that we use them. Okay, we're going to range back out to our 2-day chart. We're going to move on to our last index before we get to gold, and that is the Qs. Qs again, The Qs are down, and we're going to remove that line because that's not working for us. Well, the Qs are also down on two-day. Actually, 3 down candles we have on the Qs since they crossed over going down on the 2-day chart way back in December. And the Qs really slid sideways for a while till about the beginning of January, and then tracked down until around the 21st, then slid sideways and moved around hard again around the beginning of February, around the 4th. Now, if we look intraday, what do we see on our 4-hour chart? Well, we see on the 4-hour chart that, again, we bottomed out somewhere around around $96. And we've seen a little up movement over the course of the last couple of days. Again, for the day, 0.38%, so almost 0.4% up move in the Q. Still confirmed down moves, but getting closer, converging, coming together of the MACD and the signal line. Again, that's on the short chart. Short chart does not make a big chart, but hopefully those of you who are out there following the charts with us, you jumped in on your virtual trade and captured a huge down move all the way down to $95 from somewhere around, when the crossover occurred, 100. If you'd have gotten in at the best spot, 102.46, but the worst spot was 100. So again, down to 95, that ain't bad in anybody's book. And that was over the course of just a couple of days. So hopefully you were watching that and trading along in your virtual trades. Now, lastly, going to range back out to our 2-day chart. We're going to look at gold. What do we see in gold? Again, gold just continues to move up. Those of you who started following gold when it crossed over going up back on the 16th of December have seen it track sideways for a while and then start moving up in early January and just kept climbing. If we look at our 4-hour chart, what do we see? We see gold crossing over on the 4-hour chart around the 20th, and it has continued to move up, sliding sideways over the course of a couple of days or so on a couple of occasions, and then just moving up. Now, when we look at gold and what it looks like on our 4-hour chart, again, gold is up 0.77%. It looks like gold has been topping out for the last few days, and we see the MACD and signal line getting closer as time wears on. So hopefully if you captured a lot of this gain, you might be happy with those gains. If you got in somewhere around the high on the 21st at 105, hopefully you're happy with making close to $10 on gold over the course of a few days. That's pretty good in anybody's book. That's what we're trying to do. That's what we're trying to learn how to do. That's what we're practicing. Thank you so much for joining us. We love to hear from you. We appreciate all of your comments that we receive on Facebook, Twitter, Instagram, YouTube. Please go to the website, chartingwealth.com, sign up so that you get these reports every single day for free. You can also go there, lots of different training videos online, but friend us on Facebook so that you also get all that information. We love to hear from you. Thank you so much. If you sign up for our newsletter, of course, you'll get our charting layout for free, and you'll also receive a link to our 15-minute How to Read a Stock Chart video. Hey, folks. All we're here to do is to help you get comfortable in reading the charts. So, because we always say, follow the charts and not the noise. Thanks so much. God bless. From chartingwealth.com.